Good afternoon. In this video, we're going to go with this past week's trades and the weekly recap. Before I get into the recap, if you're not in the room, you can find the link in the description of the video and in my bio section of social media accounts. Also, please like the video, subscribe to the channel if you haven't done so already. Now, my voice, yeah, I sound awful. I got a cold, so I'm trying to do this as best I can, so bear with me. I had 23 wins, 2 losses, and 1 flat. Flat meaning I got out even. So when you get out even, it's pretty much a win anyway. So I finished the week with a win rate of 92.31%. Very happy about that. Weekly goal is 85%, so I definitely exceeded that. Now on, it's going to be hard to talk and do a long video with my voice like this, so just bear with me. Monday, let's see, I had, 7 trades. Okay, trade ideas room. Monday pre-market, I said SPX under 382, which is, which one's Monday right here. Yep. Now I'm looking at puts under 382, which is right here. I posted this at what time? Right around 9:20, which is right here, right around in here. And obviously you get this lower 382. I mean, I could have picked this lower 381.50. Either one could have been good. I try to go off from the low of the pre-market or the high of the pre-market, but sometimes if there's like a huge gap down or gap up and then you don't really have any levels to go off from, you just have to wait. I mean, sometimes it does happen. I know it happened sometime this past week. I don't remember what it was, but anyways, just trying to blow up the hourly. So it didn't go under the 382. So I waited out the first 10 minutes and I took calls, took SPY calls because as you can see, we closed Friday after hours right around 387 and we're down to 382. So we got a $5 gap down, and when you have huge gap downs and gap ups, the put to call ratio, not the put to call ratio, sorry, the implied volatility is going to be through the roof. So I will play SPY in the first hour or two until premiums come down and worth taking. But I think they were like $30 at the money, and that's just ridiculous because usually they're right around 12 to 15. So that's pretty much how I gauge it at open. At the money is usually right around 12 to 15, and when applied volatility is up, it's going to be $25, $30 easy. So I'm not sure what it was on Monday, but I know it was obviously high enough for me to take SPY options for the first looks like hour. So I took the 383 calls at 260 at 9:45, which is the waited for the reverse 10-minute candle to form. It dipped down a little bit as soon as it broke over this high of this candle of the 383.68. You could just say 70. That's when I grabbed the 383 puts, and they went from 260 to 333 in that push up. Then I took puts at 10 a.m. Must be right here, the 200 EMA. No, I didn't take it right there. I took it right down here. Not quite sure why. I could have taken it right here, but sometimes it's better just to wait. I've been trying to be a little more patient. Sometimes I get gung-ho and I try to guess the top, guess the bottom, which I've done a couple times this week, but it is what it is. That's just how I am, how I'm wired. But 200 EMA, it rejected the purple line, but when it came below the 384.50 area, that's when I grabbed the puts. I grabbed the 385 puts at 202, and they went from 202 to 222 down to the VWAP. Then it popped back up, and right when I got over the, what time did I grab it? 10:13. Oh, it should be right here, right? 10:13 right here. As you can see, it rejected 200 EMA. I took puts right here, and it went and bounced off VWAP, and it came right back up to this high of 384.90 area, and that's when I grabbed the calls again. I grabbed the calls, the 385 calls at $1.92, and they went from 192 to 211, and that popped. It quickly got shut down again because you can see it it opened here and it went over the high. That's where I grabbed it. Then it got back up to the RCT trend line, which is this orange line, and it quickly got shot back down. So you got to take the plays while you can. And I took puts. SPX puts at 1021, which is this candle right here. I took this because of this. It pops, gets rejected. It pops, gets harshly rejected again. I thought for sure when it get below this 384.50 level again, that's when I grabbed the SPX 3840 puts at $8. And I thought for sure it was gonna dump, because usually what happens is when it gets shut down, it quickly comes back down. Let me reword that. When it pops up, shuts down, and it tries to pop again, it gets quickly shut down again. It usually ends up breaking. I was very surprised that it actually broke out and squeezed out right there. I was kind of surprised about that, but yeah, I took the 3840 puts at $8, and it averaged down at 1057, which is right here. Right here. I added more at 390, making my new average at 475, and I ended up stopping out. I shouldn't have, because they probably went green right there, but I don't know. It is what it is. So I did stop out at 330. So my average was 475, stopping out at 330. And then I took calls at 1135, which is probably right here. No, 1135. I took it right here, apparently. I get why, because you get support right here, the 3850 area. So when it did bounce right there, that's right. I ended up grabbing the 3880 calls at 650, and they went from 650 to $8. They quickly got shut down again. And then I grabbed puts at 1158. This is the kind of stuff I was talking about. Drops, pops back up, and quickly gets shut down again. So when it got below the 38.50 level again, I grabbed 38.50 puts at $9, and they went from $9 to $11.50. This has just been a mess that it's just bouncing back and forth, confusing people. Same here. It's just you don't know which candle is going to be the breakdown candle, which candle is going to be the breakout candle. You just don't know. You're trading in hindsight, in real time, so it's easy to look back and say, oh yeah, I should have bought it here. But when you're actually trading in the moment in real time, you don't know it's going to be this candle. It could be this candle. It could have been this candle. You don't know. So I did grab the puts right there. I got the, well, then we went from what, 9 to 11.50. Then I took calls at 256, which is right here when it broke over the 386.10 level, or even say the 20. Yeah, I'd say the 10. It's flagging a little bit. It pops up, get a little bit of a channel. Then when it gets up to the high of this low, that's when I ended up grabbing the 38.75 calls at 650, and they went from 650 to $21, and that pushed up if you held all the way through. So this is just how it's been. You just gotta pick the right moments to pick the plays, but you just don't know which plays are going to chop and which ones are going to actually take off. So this is a prime example of that. They've been trapping both sides when it gets in the channel here and here and here and here. You just don't know. I mean, this could have been a monster trap too, but it ended up popping. So it is what it is. Trading is all about probabilities and stuff like that. So plus going into the last hour of the day, I figured that we might get some kind of push, but wasn't sure, but I took it anyway, so it was a nice little play. Tuesday, let's see, I had 5 winners, SPX. On the 20th, Trade Ideas room, I said SPY puts into 385, Microsoft calls over 244, 385. This is one of the ones I had trouble picking because of gap down through is at 390 pre-market, and it's opening up right around the 38.50-ish level. And so I picked 385, rounded down to the nice round number, but plus also looking at the day before, the 385 level has been pretty big pivot. As you can see, it's right here. resistance. Now it's support. So I figured it was a pretty good area for to call as a level. But I don't usually go after the level at open. I wait for the first 10 minutes, no matter what. So I waited for the first 10 minutes. And I took 384 puts at 940. So right here, right when it broke below this candle right here. Right when it broke below this candle, this is where I ended up grabbing it. 384 puts at $4.05, and then went from 405 to 438. And then I grabbed SPX calls at 1007, which is right here. Yeah, right here. I grabbed the 38.75 calls at 860, and then 860 to 910. Not much of a move. We got 50 cents out of it. Excuse me, my voice is like killing me. Drop down, pop back up. Right when I got over this 38.24, 384.25 area, that's where I grabbed it. Not much of a move, but if you get at the money, these small moves will move 50 cents to $1. So I'm able to squeak. Why did I say squeal? Squeak a small move out of that. And I grabbed calls again at 11:51, which is right 11:51. Right here. Not quite sure why I didn't grab it there. Probably didn't think it was going to take off, but yeah, I probably should have grabbed it there again. I should have kept taking calls at that level, but I mean, I could have stopped out right there. But yeah, anyways, it is what it is. But I took calls right here, right over the 38, the 385 10 area. I'm sorry, I'm so out of it, but the cold is just taking a toll on me. So I took the 38.75 calls at 750, which is right in this candle right here. As soon as I got above this 385 level, that I grabbed the 38.75 calls at 750, and then went from 750 to 1220. And I took calls again at 122. Where's 122? Right here, I started it. I was thinking double bottom. It was going to stay within a range, so I bought calls there. It didn't do that. It fell through. And then I ended up adding it 246, which is right here in this candle. I do remember this. I wasn't going to add yet. I just wanted to wait. I could have stopped out. I wasn't in it that much, but when it came back up, I almost added here. It dropped a little bit. Then we had something that happened here. I don't remember what it was. It just quickly jumped up, and then I just jumped in. I bought more at $5, making my average at $5.70, and they went from $5.70 to $8. So that it didn't even need to average down. I could have got green without even averaging down, but I took this advantage right here when it. I still can't remember what it was that did this. There was something news related that did this. So, but yeah, I jumped on it, averaged down, and got out green. So then I took puts at 305, which is right 305. I took the VWAP rejection. Kind of ballsy to do after this green candle, but yeah, I took the VWAP rejection right here. The 38.45 puts at $6, and then went from $6 to $8.30, and I just call it quits. I could have taken another move right here. I mean, it dropped and quickly went back up to VWAP, and right when it crossed VWAP, you could have got another calls play easy right there. So yeah, I could have taken another one right there, but 5 wins. Just said, okay, let's call it a day. I mean, I don't want to trade too much and do something stupid. Now FOMC day, I didn't do anything on FOMC day. I didn't do anything until the actual event happened. I've been usually doing that lately because of the market gets too choppy, and you end up taking too many losses or getting stopped out. So it's not worth it to me. I've been just waiting for FOMC. I'm in no rush. I mean, you're going to have a solid hour or two of trading, high volatility. If you can catch them right, you'll get some monster plays. And we had some monster plays on FOMC day. So Trading Ideas room, I still posted anyways, even though I wasn't planning on taking anything. SPY calls over 38.60.50, 386.50. Tesla puts under 306. This is where I got the level right here. 386.50, the high of this candle, rounded up for the $0.50. I know some people in the room took it, and they had a good trade-off. Good for them. I just did not want to do it. I just decided, nah, I don't care. So, FOMC strangle. They SPX was so expensive. I had to play. I actually had to pay a lot of $7 plus. I don't really like doing that, especially if you're playing a 150 point spread. I mean, played 3,800 puts and 3,950 calls. That's a 150 point spread, and I did not like doing that. So, and but they were expecting high volatility, and that's what ended up happening. So, the 3,800 puts I got at 760, and they went from 22 went to 2260, and the 3,950 calls I got at 790. I ended up stopping out at like most of them were out at 6. I stopped out at 6, and I stopped out the rest later on. I don't know what it was, $3 or so. I don't remember. I mean, I could have let them go to 0. I was fine, but I just said, I'm going to take it anyways. But I took the play at 148, which is in this candle right here. I try to take it at least 5 minutes before SPX, the FOMC meeting happens. I usually tell the room what strikes I'm looking at 15 minutes before FOMC drops. That way people can pull up and look at them and adjust if they want to or whatever. I don't. It's up to them. So I found the 3,800, 3,950 had the best volume, and they were right around the $7 level. So I didn't want to go out any further. I just didn't want to take the chance. So yeah, that ended up being a good play. The puts went 150%, 760 to 2260. So they went 150%, even if you held calls. So I always try to get 100% one way. But some FOMCs don't let that happen. But usually the first move is the wrong one. So when it had this huge dump, I thought that was the first wrong move. Because usually what happens is that the first 10-minute candle is the wrong move, then the second 10-minute candle is the right move. So, but when it dumped down here, I was like, okay, we're gonna push. So we didn't. I should have held the calls, but I didn't. I'm glad I didn't, because even though SPY went up here to 389, they never went green, because the implied volatility was so through the roof that I took them at 6 and 3. When I got back up here, I think that I was looking at the option, and that they didn't even get up to like $4.50 and $5. So I'm glad I took it when I did. But that was a huge monster move. And then when 231, I took calls at 231, which is this candle right here. And this big red candle, another red candle. Then you had this green candle, and I was saying in the room, if it gets over this 383 level, I'm taking it. The 3,900 calls, and they were at $7.70, and they went from 770 to 24.30. Another 200% play right there. And I was hesitant about guessing top. So what I was doing was the same with the bottoms. I was waiting for this kind of scenario right here. We have these monster candles. Yeah, I could have dug the tried to grab the bottom right here, but you don't know what the bottom's going to be. 380 is definitely a solid number. You know, would have paid off, but I was waiting for a couple of small inside candles like this. Then once it broke over the small inside candles, that's when I was taking calls, and that's exactly what I did. So instead of trying to guess the top, which I've done in the past on FOMC, and not done very well doing that, because once FOMC starts raging and you think the top's end, it just rages more, and it's just I waited for did the same thing, get the massive candle, inside candle, and inside candle. Once it broke below the 385 level, that's where I grabbed puts at 315, which is right this candle right here. I grabbed the 3860 puts at 775, and then it dumped. So that went from 775 to $25. So 150% play, 200% play, 200% play. So the next FOMC meetings, I will be patient, wait for these inside candles like this, because that was the right move to do that. If these moves never happened, then I just didn't take the trade, whatever. So it is what it is. So definitely a great, fantastic FOMC day, probably one of the better ones I've had in a while. Then on Thursday, traded his room. I said what? SPY puts under 376, Amazon calls over 119. 376 is this low right here for pre-market, and so we had the first 10-minute candle right here. I didn't take it. I know some of the room did. I didn't. I waited. It's just something you need to make on your own. I wait the 10 minutes because the first 10-minute candle ends up being a very bipolar candle, very trappy, misleading. I think the second candle is definitely the better one to do, and just the way I've been doing it. So once this first 10-minute candle formed, it broke lower day at 375.70. I grabbed the 377 puts at $4, and then went from $4 to $4.81. Then I took SPX calls at 10.12, which is right here. Dropped, came back down, and started to pop. That's where I grabbed it, right over this 375.50 area. And they went from $7 to $9.30. Then I grabbed puts again at 10.31, which is right here. You can see it popped up, came back down, went up to VWAP, and quickly got rejected again. And once it got below this 375 area, that's where I grabbed puts. I grabbed the 37.40 puts at 8.50, and then went from 8.50 to 11.30. Right there, nice little move. Then I switched to calls at 11.18, which is right here. No, 11.18. 11.18 is this candle. No, it's this candle. It dropped, got bought, and then I think that I got it closer up here because I got it in this candle. I got the 37.70 calls at $10. It dropped and it popped back up. Went to VWAP. I was able to get out. They went from 10 to 12.40. So $2.40 move on that. It must have been rated at the money. And then I bought calls again at 12.38, which is right here. No, 12 what? 12.38, which is right here. No, right here. Yeah, right here. This one made sense. I could have got it there too, but I didn't. Back went to VWAP, quickly got rejected. Went to VWAP, and when I went over VWAP again, because it got rejected harsh here and it came back up so quickly, I thought for sure this was the candle it was going to break. Because usually that happens a lot when you have these quick rejections and they get quickly back up. That's when they end up breaking out usually. So I grabbed the 37.80 calls at 6.50. And they went from $6.50 to $9, and that push up right there. Then I didn't do anything. I could have bought calls. I could have bought puts right here, but I didn't. I could have. I probably should have, but because it broke below all these candle lows right here, 374.90. I could have bought puts there, but I didn't. I bought calls at 130, just right here again. Thinking that, okay, we rejected, came back down, and was going to come back up and break through again. And it did momentarily. It did. Then it pulled back. Then it finally did actually break. So I had the 37.75 calls at 7.40. And then went from 7.40 to 9.50 right there. It just would not break out. I thought for sure this was going to be the ticket of breaking out because you get an inverted head and shoulders. You get the left, you get the head, and you get the right shoulder right here. I thought for sure it was going to break out right here. And it quickly got shut down again at this 375 area. It just quickly gets shut down. So I was like, okay, I've had enough of this. I played the channel, but basically mostly. And then it finally breaks over here. But, that's the part of trading. You don't know which candle's going to break out, break down. You're playing in real time. You have to guess. what you think is going to be the high probability of breaking out. So the more it chopped in here, the more I thought for sure it was going to break out. I mean, it didn't here, it didn't here, it didn't here. And I was like, okay, it's going to right here. Even though I got it right here, but I thought for sure it was going to right here. And it did break out a little bit, but it actually got pulled back. So I was expecting this kind of move right here, but it just never happened. But it did happen over here. I call it quits because I already had 6 wins already. I didn't want to overtrade, and I didn't want to. I've had enough of this mess for one day, so I was like, okay, I'm done. I'm not playing around with that stuff anymore for today. So, Friday, not so good of a day. Trade ideas room. SPY calls over 371. Microsoft calls over 240. 371 is rate. I was using this area right here. I'm using the high of this right here, I think. Because I posted it late. Let me see. Let me back it out a little more. Yeah, I was using, I think I was using this high right here and just rounded down. Right here. I should have rounded up, but doesn't matter. And it didn't break over that. First 10-minute candle formed. I didn't grab puts right here. Plus we had the massive gap down from what, 375 to... So yeah, we had a $5 gap down. I thought for sure we were going to squeeze. That's why I was looking at calls. We've been gapping down, having these big gap downs. We had this one, we had this one, and this one, and this one. So I was like, okay, we're going to get a short squeeze, but we never got one. But we're probably going to get it tomorrow because the put to call ratio is really high. I'll go with that on the watch list. But anyway, so I grabbed calls at 10. I grabbed it right here at 367. Why did I grab it right there? Oh, I remember why. The 200 EMA on the day on the weekly. That's why I grabbed it there. I grabbed the calls right there. I grabbed the 3720 calls at 880. I remember that was why I grabbed it. If I take to the weekly right here, as you can see, 367 was where the purple line, the 200 EMA on the weekly. You get these moving averages on larger time frames are more significant because algos, they respond to them. Like right here, I went to 200 EMA and it bounced. So I was pretty confident, at least the first time it tested it, algos were going to buy it, even if it was just a little bit of a bounce, which it was very tiny actually. But it did react. So those calls went from 880 to 1150. And then I grabbed calls again at 1030, which is right here. I grabbed the 3720 calls again at 950 with the same thesis that it's going to keep bouncing off the 200 EMA on the weekly. I got it at 950 and it dropped down. I ended up averaging down more at 1050, which is right here. When it broke more lows, I grabbed it again, still thinking, okay, sometimes SPY likes to overshoot and undershoot. In this case, I was thinking if it just dropped below the 200 EMA, algos would jump in and pick it up. And because it does it all the time, that it will, sometimes it will react right at the initial contact of the moving average, which it did in this case right here. Then sometimes it will just like overshoot it, go through it just a little bit to stop people out, and then go through it, then get bought up and go back through it again and hold above it. So that's why I bought it here thinking it would hold, and when it came through again a little right there, that's why I averaged down, added more at 650. And my new average was 8, so I took it and got out. I got in at 950. I think I had 5, and I added 5 more. I didn't want to go crazy. So when I had a chance to get out even, I just took it. So then I took calls at 1137, which is right here. Same thing, same mentality, which was wrong. I took 3,700 calls at $11, thinking we were overshooting the 200 EMA, and So I grabbed it thinking it was going to bounce, and it was just the wrong idea. I shouldn't have done that. So the 3,700 calls, I got $11. It stopped at a 580, but I took puts at 203 right here. I didn't take this. I thought about it, but I was like, okay, the last play I took flat, and this one ended up being a loss. So I was like, okay, I just need like a few minutes. Like, give me an hour or so. I'll just watch things and just see what happens. I did thought about grabbing puts right here, the 20 EMA, but the 20 EMA has been so close. I was just afraid that because it's so close and the oversold conditions, that it may slice right through and go straight up to the 200 EMA. And to me, I thought that was a really high risk play because of the RSI and the oversold conditions and the potential of a short squeeze right there. I just thought, okay, it wasn't worth it. So it did get harshly rejected. Then it channeled a little bit. Then when it got below the 365 60 area, that's where I grabbed the 3660 puts at 770, and they went from 770 to 1550, 100% move play on that. And then I took puts at 322, which is right here. I grabbed it a little early, thinking VWAP rejection. I grabbed it just a little bit early, and the 3665 puts I had at $7, and they went from $7 to 780. I got a little bit of a move, then it just raged up. So I was kind of expecting this move to happen here, but it didn't. But I probably should have got calls right over this 380, this 365 area, but I didn't. Definitely made some mistakes on Fridays, things I should have done differently. I had the right mentality right here, but I just had it the wrong. I just was too dependent on the 200 EMA. I just didn't care about it, so I just went through it. Anyways, that's going to do it for the recap. I made it through it. My voice is getting spent. So thanks for watching, and hope to see you in the room. Thanks.